The world economy is heading into the worst economic headwinds since World War II. The worst.
The financial landscape is going through a shift. Experts are saying that the world economy is facing the most substantial economic challenges since World War II. However, amidst these times, could there be a glimmer of opportunity? Join me as we explore the insights shared by Robert Kiyosaki in an interview where he discusses why he believes that what's coming is worse than a recession. Point number 1, a look into history. The Great Resetting. Let's embark on a journey into the past. Imagine a time when the world was recovering from a conflict to the aftermath of World War II. Robert Kiyosaki draws parallels between the difficulties and what we are currently experiencing. As soldiers returned home, there was an increased demand for goods while global supply chains were in disarray. The result? Inflation reached levels. This era, like our situation, highlights how economic turmoil can arise even from seemingly positive circumstances. Point number 2. Echoes of the past. Lessons from recurring patterns. Now let's fast forward to the 1970s and 1980s when history seemed to repeat itself. The Arab oil embargo and subsequent inflation triggered a series of events that led to downturns. Kiyosaki helps us understand that these situations can teach us lessons in the day. When inflation increases and interest rates rise, the economy becomes a balance. However, the important thing to remember is that the story doesn't stop with a recession. It's about how we handle what comes after. Point number 3, unraveling the mechanism, tightening monetary conditions. Kiyosaki digs deeper into the mechanics of economic turmoil. The tightening of monetary conditions, often driven by rising interest rates, can have a domino effect on consumption and borrowing. As costs escalate, wages struggle to keep up, leading to decreased purchasing power. This familiar scenario paints a clear picture of how the modern economy can crumble when the balance between costs and income tips off kilter. Point number 4, the IMF warning, navigating the economic tsunami. The International Monetary Fund's recent warning sets the stage for a storm on the horizon. Kiyosaki interprets this as a pivotal moment. The harsh monetary conditions imposed on corporations and individuals alike are among the most severe in history. Combined with global factors such as China's slowdown and Europe's energy transition, it's a perfect storm that demands attention. But as the old adage goes, the darkest hour is just before the dawn. Point number 5, recession versus depression, navigating uncharted waters. As the uncertainty looms, Kiyosaki addresses the question on everyone's minds. Could we be facing a depression? While the concept of a depression conjures images of prolonged economic gloom, Kiyosaki leans towards the idea that the power of the Fed's balance sheet, albeit controversial, could shield us from such a dire scenario. The intricate dance between monetary policy and public support payments could potentially lead you down a different path. Point number 6, the magic trick. Debasement of currency and asset inflation. Diving into economic mechanisms, Kiyosaki delves into the magic trick of debasing currency. As central banks print money, the purchasing power of the dollar weakens, causing asset prices to soar. This phenomenon often masks the true impact of inflation. Kiyosaki navigates the complexities of this strategy, emphasizing how it affects both individual wealth and overall economic stability. Point number 7, the road to recovery, a historical parallel. Drawing inspiration from the post-World War II era, Kiyosaki offers a glimmer of hope for our future. By recounting how the economy stabilized and boomed in the 1940s and 50s, he presents a potential roadmap for the present-day crisis. From the rise of technology to the rebuilding of nations, historical events can illuminate how our world might emerge from the current turbulence stronger than before. Point number 8, a turning of the wheel, the dawn of a new era. The conversation takes a philosophical turn as Kiyosaki discusses the profound societal shifts underway. He explores how younger generations demand a more equitable world and how even older generations share this sentiment. This collective yearning for change sets the stage for new economic paradigms, where concepts like universal basic income and modern monetary theory find their place. Point number 9, embracing the unknown, opportunities amidst crisis. Kiyosaki closes our discourse by emphasizing that macroeconomics is history in motion. He compares the potential fall of empires to current events, highlighting how excessive money printing led to the collapse of past civilizations. However, he leaves us with a poignant thought. The end of an era often births a new one. As the world evolves, challenges and opportunities intertwine, urging us to embrace the unknown and adapt to the winds of change. And there you have it. Robert Kiyosaki's perspective on what lies ahead in this tumultuous financial landscape. The parallels between historical events and our current predicament are striking, revealing how patterns of economic rise and fall often repeat themselves. As we navigate the stormy waters of uncertainty, remember that history has a way of surprising us with unforeseen outcomes. So whether you're an investor, an economist, or simply someone curious about the future, keep your eyes open for the unexpected twists that lie ahead.